Okay, everyone, welcome back. Stock market technical analysis. Let's get right into it. Give me a thumbs up, guys. I do appreciate that. I'm trying to get over 500 on a video. I don't think I've gotten that yet. And, you know, a lot of these trade ideas that I've floated out on this channel recently are all working and all, you know, in the double-digit profit margins. So I do appreciate that. Let's get going. Triple Qs. All right, so here's the level to watch. You know, we had a breakdown yesterday. You can see on the daily chart, we broke the lows of this recent consolidation pattern. So I think we're continuing to the downside. So what I'm seeing right now is you've got kind of this bearish rising, or sorry, this bear flag where we have a breakdown, you get the consolidation, and then you continue the breakdown. So we haven't hit this level of about 300 to 297 or so, which is right here. This is the level of, this is the key level, a key level, the next level of support. Let's just put it that way. It was resistance back here. It was resistance right through here. Yeah, we overshot it, but again, that was just an overshoot after this thing was just screaming to the upside. You can see the breakdown candle when it gapped down and broke right down. So you had a big impulsive reaction right at that level, held resistance, and then we broke above and held as support. So they've broken down. We got the daily close yesterday of the breakdown of this level, and today they're making it look like it's a recovery, but it's not. I don't see anything that tells me this is a recovery. I don't see this isn't a reversal candle or buying volume that would tell me that we're going to reverse here. So what I think is, I could be wrong. Obviously, there's always the potential to have a reversal when you're not expecting it, but we're not even close to that support level. So I suspect, we're going, maybe we chop around here a little bit, but I think at the end of the day, maybe not today, but at the end of when it's all said and done, we will be down here at around 297 to 300 area. And yeah, that's what I'm seeing. Now, down there, we're likely going to get more of a reaction. A bounce, maybe we even bounce all the way up to this 330 and fill the gap. There's a gap up here. You see it up there? We could bounce off this and run up and fill that gap. But one thing to watch for is how does the market and how does this behave as we get down to this level? If we just slice right through here, if the reaction's pretty muted, you don't really get a bounce off this level. Maybe you get a very minor bounce and then it just stops and this continues to kind of muddle around. That's going to show the nature of this sell-off is a lot more extreme than most people think, and we're going to go much lower. So now I've kind of marked out other levels. All right, so here's the other levels I think that will come into play. On this daily chart, we've got some little bit of support right here. You can see we had some support right through there, and it held as resistance. This is about 282.95, 283 we'll call it. And then we also have the bull market uptrend line, which is coming off of the 2009 lows. So this is your price channel. See the upward price channel, and the top of the channel is right up here. We overshot to the upper end of that channel in what looks like a blow off top. And so I think there is good potential that we come down and tag this this trend line up here. And honestly, I think there's actually pretty good potential that we're going to break through this trend line right here. And right now it's sitting at about 283.80. Depending on when we get there, I think there's a good chance we actually break and we head to the bottom of the price channel all the way down here at about, 250 or something like that. I think there's high probability that we do that. Now, we are going to run into these support levels and bounce along the way. It's not going to just go straight down. So you're going to come down, you're going to bounce, you're going to maybe go down lower, you're going to bounce. It's going to work its way down there. But again, that's kind of what I'm thinking bigger picture. There is good potential that we head down to the bottom. The reason why I say that is when you have a nice consistent price channel like we've had over 12 years, then and you get to the outside of it, usually if you're going to come back down and break back into the channel, you head straight to the bottom of the channel. That's all I'm saying. All right, SPY, we haven't seen the same selling in the SPY. This sell-off has really been a tech sell-off. So I'm looking for that. the selling to kind of bleed into the other sectors. and start to affect the SPY, and it just hasn't yet. So something to watch for is, as the selling increases, if it increases obviously in tech, does it start to affect the financials? Does it start to affect, some of these other sectors? And then do we start to see that impulsive selling in the SPY? The other thing is a lot of people are banking on the Fed. The bulls basically, I think for the most part, the bulls have two arguments: that the trend has been up, so that will always continue, and the Fed won't let things fail. But the reality is that the Fed's not going to step in on this sell-off just because it's a tech sell-off. It's going to, if there's a broad-based market sell-off, then that's when they'll start to sell in or step in. After the SPY starting to head lower, they might step in. But it's got to be an impulsive, sell-off. Otherwise, they're like, if it's a gradual sell-off, the Fed's not going to step in. They will let the markets just gradually sell off and reprice themselves. Only when the market starts to plunge is when the Fed starts to step in. So that doesn't mean that we couldn't just continue to go lower and lower over time. Okay, so something to take note of. And the one thing is, a lot of people when the tech sector sells off, they feel a lot of pain because everybody's piled into those tech stocks. Like, if you look at the stocks that most people are in, they've got all the FANG stocks, they've got these high-flying COVID stocks and Teslas, and everybody's piled into these tech stocks, and so they feel a lot of pain when that sells off. And that's one of the reasons why I'm pretty much shorting most of those tech stocks. Most of my shorts are in the tech sector. All right, so SPY, again, I think SPY's coming down to this trend line down here at 362. We haven't seen the selling yet, but I think we're going to head down there, probably hit this trend line down around 358, somewhere right in there. And then we wait for the break of that, see if that shows up. Okay, IWM starting to break. All right, so here's the trend line that I've got on IWM on the daily. We've been walking up that. You can see we just broke it yesterday, and today we're getting more selling. So if we get that daily close down here, then you could call that a sell signal in IWM. And that sets IWM, I think, up for a pretty good fall. Likely, we'll probably get a reaction right here at 205.53, but I think we're likely going to go a lot lower down to 190, maybe 193 area. And then that level is the support level off the March 2020 COVID lows. So that would be where, we're likely going to get a reaction at that level, bounce up maybe, and then you got to wait for a break at that level. If you break that level, then we're likely heading a lot lower. But those are some levels to watch on IWM. I think it looks good to me. I'm short the Qs, but this one could have, this one hasn't sold off too much, so this might be the next one to go, and there could be quite a bit of downside movement in this one. So looks good to me right now. And watch that bond market, TLT and TNX. You can see TNX, this just tracks the 10-year treasury yield. We're up above 1.5% again. So, we spiked above it. We had a little reaction. This is what's going to cause the Fed to start to come in. We start seeing sharp movements up in the 10-year treasury yield, and that's where the Fed's going to start to step in. So again, we'll be ready for it. I think the gold trade is likely to benefit if and when the Fed does step in. But again, I don't think they're going to step in until you start to see some more selling. They're going to let this thing run. They've already said they're willing to let inflation run, and they're willing to let interest rates go higher, and they haven't talked it down yet. So expect that to continue. XLF still holding strong. No sell-off in XLF yet. So again, waiting for a break of this trend line for the sell signal. Nothing going on there. It's still a strong market. So that's all I see in that one. Microsoft, Microsoft's just flirting with this 227.56. We break down from here, and that's Microsoft putting in a bear trap. A bull trap. This was a false breakout. So I think if we break down from here, really much lower than that 228 area, you get that daily close down below that, and to me that says we're heading straight down to 200 in Microsoft. So it's a good size drop. That would be a drop of about 12.5%. So watching for that. Watch the daily close on that one. Look at oil, how strong it is. And that's why I talked about the other day that I think oil is going to pull back, but I'm not interested in shorting it because it's a very strong market. It's been beaten up quite a bit. You know, there's some good value there in the oil stocks. So I'm not really interested in shorting something like that. I'm interested in shorting a market that just gets way out of hand and starts to show that momentum's fading, like the tech stocks. So that's kind of what I see there. Tan, looking good, you know, heading straight down. So this one's just continuing to work. You can see we're, you know, sold off, kind of flagged out. We're continuing lower. Next stop, 78.50. No change in character yet on that one. I don't see bullish divergence or anything. I just see downward momentum, downward price action, looking good to the downside. Okay, Redfin. Pointed this one out the other day that we were just breaking. You got another sell signal, and sure enough, rolling over, down 8% today. Looks like we're heading straight down to this trend line right here. You can see we held support all through here, broke, it was resistance. That's your next level of support down there around 59, about 60 bucks or so. PayPal, breaking trend line support. So this one has a sell signal as of right now, and I think it's going to continue. There's your COVID 2020 lows, walking up the trend line. It's marked here in blue, held support all through here. Then we, you know, we're just now breaking it, breaking down from that trend line. I noticed it. I took a short on this one this morning, and you can see here on the hourly what they tried to do. Here's your breakdown, and then the next candle, they made it look like they were going to recover it, started to work its way up, but then sold off and just continued selling. So in general, unless we get some news announcement today, maybe from the Fed, this one looks like it's on a sell signal and heading lower. Where is it going? Well, first level of support I've got is 225.40. This one's got a lot of room to potentially fall. So, you know, there's major support right here at 175.20. So I think we at least get down to there. I would say that is a pretty good target. But there is the potential to break below that. We probably get a bounce off of that. But there is the potential to break below that and come fill this gap right here. See this gap? And that's all the way down there at 129.55. So again, those are some levels to watch, but I like it. I've got a short position I just took up in this one. Yeah, Chewy. Let's see here. Etsy's kind of hanging in there with support 197.24. I think that goes. Peloton coming down into the 200-day moving average and some support right here at about $100. So I suspect we'll get a bounce off of this level. I'm looking to cover my Peloton short, down in this area. So maybe we soften into the close. That gives a good objective area to kind of cover. And then we'll probably, likely get a bounce up to this 118 or 120 or, 118.55. But this one's worked out really well. You can see from the high from where I had circled and where I took the trade right here, it's now it's down 33, almost 34%. I suspect by the time I get out of this thing, it'll be about a 35% gainer. Not too bad. Okay, guys, Peloton. All right, so I added to my short position added to my short position here in DraftKings. So what I did the other day is I covered half my short right there at 55.20. It popped up. I didn't add or anything to it, but I was looking for that false breakout. Everything else was selling off, and DraftKings was just going higher. Didn't make a lot of sense. I didn't think it was going to be sustainable, and sure enough, we've broken back below that support level. So this level, you can see we had a reaction high here. We had a reaction here, and it's 64.90. We popped above it, and now we're back below it. So that just basically sets this up. There's a couple things going on with this chart that I like. One, this is a divergent high. See it right there? So lower momentum, higher price, divergent high. High likelihood of failure with a divergent high. So I was waiting for a break back below this level of 64.90, which would signal that this also was a bull trap or false breakout. So far, looks good. We'll see where it closes. If they can pop it back above here, I'll just probably exit. But if it can close where it's at, or lower, then I think DraftKings is set up to move all the way down to the bottom of this support line, about 40, 44, or whenever it actually gets there. All right, so that's what I see there in DraftKings. Looks good to me. Carvana, Carvana's just still playing around with this wedge. There's nothing going on there. Wait for the break of the support line is what I would suggest if you're not in this thing. Qualcomm filled that gap. I'm surprised. It did fill that gap. It was a really obvious gap, you know, and it just filled. So Qualcomm's at support, which is 129.30. I think you're likely going to get a bounce here. Probably bounce up to, you know, this 141 area or something like that. So something to watch there. I'm not in this one anymore. ZG looking good to the downside, down another 7%. Again, this is how the downside works. You get huge moves. Everything just, you know, when you get everything overextended and the bearish divergences start to play out, you know, you start to get big moves to the downside. So ZG's, you know, moving down, coming into 132.40, first level of support. It's actually about 130. We'll just call it 133. Again, every level that I call out, you usually, if you're looking to take some profit or cover or you know, maybe go long, whatever you're trying to do, I always look to step in just a little bit early off that level in case, one, I got my trend line off just slightly, and two, in case anybody's trying to front run it, you want to make sure that you're, you know, getting filled on whatever position you're trying to take. Neo, we hit support on Neo. We undercut it a little bit. I was watching this. We undercut it at, you know, it's about $40. We undercut it, but then they recovered, and right now it's just hanging out there above support. So at support on Neo, probably going to get a bounce, but again, we got to watch this. I think we'll probably have to battle with this level, $40 for a little while, and then the next sell signal would come on a break of 40. We get a break of 40, impulsive break, then I see 22 as the next level, so that's a good drop. You know, if you break 40, that's a drop of 50% just on that drop. So that will be a good one if and when it triggers. Keep watching for that. Tesla continuing to roll over. Again, I was building a position as we were ramping up through here, and now we're rolling over. This is well into the money. Tesla, you know, you've got some support right in here. This is kind of the level right about there. So we're probably going to, you know, we'll probably bounce here. I don't know. This one I think has the potential to really break, but I have a feeling this one's not going to break. It's going to break slowly as there, you know, and then it'll break very slowly and then it'll break all at once. That's kind of how I feel this one's going to go. And we got this trend line down here. I do think we're going to get down here at about 565 or something like that. We'll just keep an eye on it. But that trend line's on the daily chart coming off, you know, a couple reactions, lots of reactions right in there. So watching for that one. We'll probably bounce on that trend line, and then if we break that, then I really think it's, you know, a lot more downside in Tesla in the near future. TTD, this one, the trade desk. All right, so you can see just completely collapsed. You know, this one, just here's your trend line off the, you know, trend line support, negative divergence. I talked about this one as a good trade setup. You know, we broke that trend line support here. Kind of, you know, they braked it higher. They, you know, that's what happens. You break support, and then they usually try to shake everyone off that trade. And now it's playing out, you know, breaking down. I mean, just in 3 days, this thing is down, you know, as of right now, 21% in 3 days. So that's pretty much wiped out all, you know, 3 days of drop have wiped out all the gains since going back in November. Again, that's what is that? 4 months wiped out in 3 days. That's how the downside works. And again, that's why when I start to see bearish divergences and things starting to set up bearish, that I don't just, you know, I don't just get long. I start to think about the short trade, because you never know when those 3 days are going to show up. You know, someone commented that why not just stay long and grind higher for months and months and have gains, because you don't know when those 3 days are going to show up. So you get positioned, maybe you got positioned, you know, here, or, you know, and everything looked great. I don't know, but those 3 days show up out of the blue all of a sudden, and they wipe out all those gains, and you take on quite a bit of losses. So not interested in getting long something when it starts to put in a big, long, extended negative divergence. I look for the downside. Okay, and let's see here. What else is interesting? Oh, AMD's starting to break too. This one's kind of interesting. It's not super impulsive yet, but possible sell signal on AMD. And this one is a big trend line. This goes all the way back to 2016. So you can see this trend line on the daily chart, just nice clean uptrend. Recently, we've got this kind of sideways range that it's been stuck in. I've got it marked out. And we also have big, long, extended negative divergence. See that right there? So then you wait for the break of trendline support. And we're starting to crack that right now. Watch for this to get more impulsive. If it continues to sell off impulsively today, that's your sell signal in AMD. And this one, you got some support right under here. One thing you could do, that since this is such a big trend line, such a big, long, extended trend line, I think it's probably prudent to wait actually for a crack of this one at 73.80, because I think we might come down and hit that 73.80, bounce, do some back testing action, then roll over. So I'll probably wait for a break of this 73.80. We get a break of that, then we're heading straight down to, we've got some support down. This was former resistance right in here. I'll have to kind of tighten it up, but we'll probably head straight down to this level at 58.80. Yeah, so, and there's some more levels down below, and I think we'll actually go quite a bit lower, but I'll just point those out. And then GDX, I want to wrap with this so I can get this video out. GDX is hanging in there. This is the gold mining ETF, so I don't want to go into all the individual gold miners today, but look at the GDX, how it's just kind of hanging in there. And one thing to note, it's at major support. Look at the support here on GDX. This was former resistance for many years, held resistance there, held resistance all through here, and then we broke above. It was support, 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 and now we've had a nice good correction in the miners, and look at where we're trading at. So again, I like this area. It doesn't mean it's going to hold. There could be, but I think it's going to be choppy and whippy in this area. So it's going to, it's going to gap down and pop up. It's going to whip people out, but I think this is going to, at the end of the day, hold as support. And also you can see on the RSI right here, we still have that bullish divergence. We made an equal low, and it has not gone below. So still bullish divergence in the RSI, and look at the PPO on the GDX. Still got it there. So bullish divergence on the daily, holding at major support. Again, that's the best you can do. So the individual miners all look a little different, and but this is kind of the aggregate of the miners, and so far looking good. So I'm gonna get this out there, guys. Leave me that thumbs up. Try to get me over 500. I would appreciate that. And if you're interested in learning how to use technical analysis to find your own trade ideas, or also help, these videos will supplement your knowledge. Knowledge is key, and so check out my course. Link is in the description below. Again, it's a $99 course, and it's going to give you a skill set that you can use for a lifetime. So super valuable. I feel like the value is just extremely good. I've priced it accessible to all. All right. If you're in the markets and you're trading, I think you got $99 to enhance your skill set. All right. So check that out. Link is in the description, and I will catch you guys on the next video.